record the lectures and upload them. And as far as I remember, if I forget to do this, I believe you also have an option to start recording, any of you. And if you see that I'm not recording, all of you can press it. And later on, I plan to share the videos of lectures with you, so you will have access to them and if you want to repeat something. This is the main technical part, so let's go further. This is important slide because it determines the scheme of assessment. We have multiple attractions during the course. The final one would be the exam, the final exam. Also, we have a midterm exam. Those two will be conducted online using electronic systems that we have in HSE. There will be proctoring, but it will be offline proctoring, so I will just have a record of what you're doing during working on the test. Midterm will cover the first half of the course, final exam will cover the second half of the course. Usually the tendency is that you guys, or your previous cohort of the students at least, they write midterm quite poorly, but later on, till the final exam, things go better, you catch up, and finally the distribution of grades is quite close to the normal one. It's not the rule that you should do poorly on the midterm. I believe it's quite doable to do fine right from the beginning. Just make sure that you follow the material, and as this course is organized in a way that every subsequent chapter is based on the previous one, this is particularly relevant for the initial parts that we'll discuss. Make sure that you understand the things right away. Do not hesitate to ask the question either to me or to Vladislav. We can have separate consultations if necessary. So we are here in the either online or offline. However, just we are very happy to see the interest from your side, and we always ready to help you with that. We also have two homework projects, homework assignment. One would be at the second half of this module. The next one would be in the second half of the third module. You should upload them to Smart LMS, not just LMS. We will work in a Smart LMS. It's a better version of this program. I believe it is more reliable, and please upload your materials there. We will have a deadline to upload them. Before that, you will have a chance to ask some questions regarding it. But if you fail to upload till the deadline, then will be the grade reduction for sending your materials directly by email. So if you send it later, you will have a grade reduction. And also, every year we identify some plagiarism there. There are certain characteristics that makes us certain that you copied from somewhere, and in that case we also will either reduce the grade or do not consider this material at all. Make sure you do it yourself. As it is individual work, of course you can discuss it with each other, but each file should be done by yourself. And it is the first assignment would be based on the working with the stock market. So you will need to comprise a portfolio of multiple stocks and identify its return and risk characteristics and estimate the effect of diversification. And the second part will be devoted to the risk management part. So you will need to make some risk management estimation of the project. Both of them will be organized in Microsoft Excel that will be uploaded to the Smart LMS system. Also, the final part final component of the grading is a class participation and assignments. So the class is organized in a way that we consider some exercises. We'll offer them to you. Vladislav will offer them to you, and then we will discuss how you can solve them, how you can work with them, and also maybe discuss some materials related to the lecture, so make sure you understand it. Seminars, the prerequisite to each seminar is the lecture material. So we want to make sure that you had a chance to attend the lecture, to look through the slides. The slides will be uploaded to the smart LMS system, so you will have video materials, you will have slides, we will share some additional Excel materials for the topics where it will be necessary and so on. So we will provide all materials necessary for successful completion of the course. Just do your part of reading through these materials and understanding them. And assessment of the class participation would be organized in a way, so we want to make sure that you work on during the class. So if you present that you worked, that you did something, then we consider that you participated during this class. If you just attended, then it doesn't count. So if you just sit there doing nothing, there is no need to go there. It will not be counted as class participation. And assignments are written there. So we have two options. If we see that you do not understand the lecture materials, so if you visit seminars unprepared, then we will organize additional assignments and to make sure that you understand the lecture. If we see that you are familiar with it, then we'll have just class participation. Any questions here? Please let me know if you want to discuss something.
I'm sorry, could you please accept the request of Urazova Alexandra?
Yes, I told you that it's quite difficult during the... Let me try. Okay, let's see. There are... Yes, now I added some other people. Anything regarding this grading part? So let's make sure that you understand it. Is everything clear? In terms of the grading itself, we do our best to make sure that grading is objective. The criteria are very clearly articulated. If you will have doubts, we will spend some time explaining to you what happens. For each element of the control, there will be period, then we will show you your results and answer the questions if something is unclear. Here, I do not expect any ambiguity. So everything is quite straightforward, and in each component, your grade is determined as a fraction of the correct answers to the total number of questions. So if we talk about midterm or final exam, the same for projects. It is a fraction of things that you did correctly in the total number of things that you should do here. And in class participation, the logic is absolutely the same. We have total number of seminars, the fractions of seminars where you participated will be multiplied on 10, and this will be your grade for the class participation. Everything will be presented in a Google Sheet. I want to also try to use Smart LMS gradebook. Just we'll do backup in Google Sheets because former LMS usually failed because there are too many students, and former LMS gradebook failed in this case. That's why we shift to Google spreadsheet, but this edition should work better, so we will try to work there as well. But anyway, information will be available in Google Sheets as well. So at each stage of the course, you see your current progress. You can estimate what grade to expect according to your current results, and everything should be transparent and easy. Anything else? You can.
This exam will be at the end of the December, right?
Could you midterm?
Yes, when the midterm will be held.
Yeah, Arina, the midterm would be during the last week before the session.
Okay, thank you.
Because it is not the full capacity exam, it's our internal element of control. It should be before the exam week. Ekaterina, no, I'm not the fan of automats. No, there won't be any. Just because the preparation for the exam is a big part of learning, and I don't want to give away the chance to learn my subject better from you. It is an important part, but still the course is manageable. We have all kinds of grades. Usually we have even very few number, 1 or 2 people have 10s. There are a decent number of people who have 9s or 8s. So everything is absolutely possible. And in general, I myself see the very straight logic in everything we'll discuss with you. And I encourage you to understand this logic to make sure that it makes sense for you. If something doesn't make sense, try to read it again multiple times. If it still doesn't make sense to you, approach me or Vladislav and we try to repeat it for you, maybe use some other examples, understand it in another way. Because here everything is very logical. And if you see this logic, there shouldn't be any troubles here. But if you do not, then obviously there might be some. Yeah, unfortunately we have students who fail with other course. Also every year we have such cases, but I'm never happy about it, and mostly this happens just because people haven't done almost nothing. And so they do not see any basic things. So all decent, hard-working students pass our course successfully. And also, our course is a basic course for the broad range of further financial courses that you will have in your curriculum. There are investment courses, risk management courses, taxation courses, everything related to the entrepreneurship and business planning. It is also, to the big extent, is based on the finance, and that's why it is useful to understand it for your future curriculum and for your future career in any business. Anything else you want to understand or share? Yeah, and also what we discussed with Vladislav, we will send you today or maybe tomorrow, very soon, we will send you the short questionnaire to see what you expect from the course, what you want to learn, and try to adjust the curriculum accordingly to make sure that we provide you what you want. Of course, there are some basic things that we should cover, and in our course we cannot go too deep in some particularities because we should understand the very basic principles of corporate finance, and I want to make sure that you get them. But anyway, there are some focuses that we can make during the course, and according to your preferences, we can adjust it somehow. So please use it. I will use the Smart LMS platform, and you expect to receive emails to your corporate email, and there will be the link to this questionnaire. Okay, let's move on then. The basic textbook is Braille Myers Allen, The Principles of Corporate Finance. I have it here with me. Yeah, this is my book that I have on my desk. It is very well written. Sometimes students ask for the materials in Russian, but I believe it doesn't make sense. As all this discipline was developed and all the terminology was introduced in English, it makes much more sense in English than in Russian, unfortunately. The translation in Russian might be clumsy, and the language used in this book is very simple. As you guys, all of you have quite high proficiency in English language, there shouldn't be any problems with that. And in general, in finance, one of the objectives of this course and in general is to introduce you to the global body of knowledge in everything related to finance. And in that sense, it's also way more reasonable to get used to communicate everything related to finance in English. Then you will have much more opportunity to use the sources that are 99% of them are in English, to present your own ideas, to be understandable for other people. In that sense, let's get used to discuss financial things in English. This is the list of topics that we covered during the course. As you might see, there are less bullets than the total number of lectures and seminars we have. It means that we will spend multiple classes on some of those topics, particularly on the initial one. For example, the next week, the things we'll discuss next week and probably week after that are the very, very important ones. So if we choose anything from finance, if you need to choose only one, I would go for the second one, because this is universally applicable ideas about the time value of the money, about the cash flows, how they organize, how to compare cash flows which are spread in time. So how to compare $100 today with $100 2 years ahead. It is obvious that $100 today value more because you have more opportunity to make money in 2 years. So in 2 years it will be already more, at least if you just put them on the deposit. And how to compare those money? There are multiple factors that we should consider, and we will introduce this topic next time to you. And also there are particular types of cash flows. So cash flows, some amounts of money that you receive during certain period, and how to make sense with it, how to work with it, how to estimate its value, how to assess it, we will discuss later on. And there is also, we will briefly discuss it at the second lecture and on the third, the concept of risk. The concept of risk is probably the hardest concept in corporate finance because there are no final answers, there are no final things that we just follow and define. So unlike such subjects like accounting or international financial reporting standards, there are definite answers to most of the questions. So you just can learn how to do things and be the excellent in that. In corporate finance, there are more things that are we cannot give definite answers to them, and in that case our subject is leaves more room for the scientific approach, for the expert judgment, and I believe in that case it is more fun to work with it, even though it requires some knowledge of accounting and international financial reporting standards. So they still are very much aligned, and using them together, you can do some research in finance. And there are a lot of things that we can research, starting from the personal finance, so how to allocate your own money, to the state finance, how big nations should ensure that their population is doing fine using the financial mechanism. So from the very small level of your own pocket to the level of the huge countries, huge amount of money, trillions and billions of trillions dollars, there are some principles that are universal that we'll discuss here. On the third and fourth class, we will discuss two main parts of securities. There are bonds and stocks. Bond represents the debt and stocks represent the ownership of the firm. On the fifth class, we'll discuss the risks, how to estimate. There are some basic ways to estimate the risks. So we can at least approach this topic somehow to provide some reasonably good answers. But anyway, this risk estimation is quite intriguous and infinite topic in a sense, because risk is working. When we talk about the risk, we work with the future, and future by definition is uncertain. In that case, there are no finite answers, but still we can do quite a lot to make sure that our firm is doing fine in any case. So regardless of how things unfold, we can make sure that the firm is doing fine, or at least we can do the best. And still, even though, as I just said, this issue is that doesn't have infinite final perfect answer, there are still we can do a lot to make things better regarding the corporate finance, and we'll work on that. Then we will talk about portfolio theory and capital asset pricing models. So those are probably the most famous theories in the corporate finance. Cost of capital. It is a part where we'll discuss how to estimate how expensive it is for us to attract money. So money, there are multiple sources where we can get money from, and those sources are different in value, in the costs that associate with it, and we will discuss how to estimate. Capital budgeting, that it's the second homework, will be mostly associated with the capital budgeting part. We will talk about the ways to estimate the risk of the corporations there in this capital budgeting part, and we will work there. Financing decisions, it is a part of, we will discuss it very soon today, so I will not spend time here. Payout policy is also related to something we'll work on. Derivatives is also we'll give only a brief introduction to it. It is also, derivatives remain being frontier of the corporate finance, and there are a lot of things to discuss. So those are the securities which are issued based on the other securities, and there are some types of them that we'll cover. And finally, international corporate finance, everything related to exchange rate and different types of currencies and how they affect the business. Do you want to ask something here or any comments? Good. Let's move on. If you want to ask or add something, you can write it in the chat or raise the hand and we will respond to them. Let's start from the introduction. The idea of today's class is to first to settle organizational things, but I believe we mostly are over with this. The idea related to the content of the course. Will we study companies that are worth investing in? Yes, Ekaterina, we will do in the first homework assignment. We'll work with the real stock market, and we'll estimate the results of your portfolio comprising of the different stocks. Yeah, we do our best to make sure that our course is well grounded on the industry, on the real financial agenda. Yeah, it's not maybe if your question is how to, it's not applied investment course. It's not something that just how to trade, so how to download VTB investment to Tinkoff Invest and become rich. Our course is not kind of that, but still we discuss basic concepts related to it and discuss real companies, and it is an introductory course. Using that will be useful to go further and become the successful investor. Here is a simplified balance sheet of the firm. I believe you had the courses in accounting, maybe in international financial reporting standards, where you already saw the balance sheet of the firm. And this one is a simplified one, introduced by, it is offered by Asvat Damodaran, one of the most famous scholars in finance. And the point here is to illustrate how the valuation of the firm is organized. Going back to the practice, we can see that there are some firms which are getting hot on the stock market, which are very, very valuable. There is example of the Tesla Motors that you will cover more in details with Vladislav during the seminars. Probably many of you heard about it, that even though the current production volume is way lower than, for example, Volkswagen Group or Toyota, their valuation of Tesla Motors is way higher. So, no, what we mean by valuation? We mean that there are some stocks which are available on the market, and there is a total number of these stocks. So we just multiply the current price on the stock on the market. We multiply on the total number of stocks, and that's why how we can estimate the total value of the firm. And the total value of the firm will be presented here on the liabilities side as the total value of the equity of the firm. And as you see, so this part fluctuates, and it reflects multiple things. But the main one, what equity price is reflecting. Equity is financing associated with stocks, with the ownership. And what equity price reflects? It reflects the growth expectations regarding the firm. That is why Tesla Motors is more expensive than Toyota, for example, as a total firm. Even though the size of the Tesla Motors, amount of assets that it has, so the amount of things on the left side, amount of things here that we have, even though Tesla has here way lower, as people expect this firm to grow, the equity is getting huge, and as a result, to make the balance sheet balanced, we have a growth part expanding as well. And so this is a principal scheme that we use in order to estimate the value of the money, in order to make sure how this value, where it comes from. So it mostly comes from the growth expectations of the firm. But there are multiple other factors that we will discuss later on with you. And in the passive side, the also important part is a liability. There are several types of liabilities that firm might have, and we are about to discuss them. This is very simplified things of doing business. Today's class we discuss main areas that we will focus on during our course. And if we put things, if we compress them, ultimately everything that we discuss in finance, we can compress everything that firm does in this scheme. So here we have a firm, and firm, what it does, it invests in something, so it spends some money on something, expecting to make more money out of it. But where we get this money from? So if you, let's say you want to resell the goods somewhere, first you need some money to buy something, then you will sell it. As I believe many of you are familiar with the cartoon about this Простоквашино, vacations in Простоквашино, yeah. In order to sell something useless, we need first to buy something useless. Yeah? Чтобы продать что-нибудь ненужное, нам надо купить что-нибудь ненужное. А у нас денег нет. Yes, and in this case, this scheme works very well to the finance perspective, the corporate finance. As we have a firm, and firm needs some money to do its operations, and there are two main sources where firm can get money from. Those sources are debt and equity. Debt can be either bonds, or it can be loan from the bank or loan from the private individuals. And equity is a source of financing. Then we sell the fraction of our firm. The advantage of the debt would be that when we have a debt financing, for example, when we borrow money from the bank, we do not lose any ownership. For example, you might heard the story of Pavel Durov and VK social network that used to be called ВКонтакте. One of the strategic mistakes that he did in the initial part of his career, so he's probably one of the best and one of the wisest person in the world in terms of the social networks, in terms of the IT and that things, but he made serious mistake in a financing decision part. The mistake was that at the very early stages of doing his business, he sold a big fraction of the firm to some partners that eventually sold this ownership to Mail.ru Group, yeah, and he lost the control over the firm. Yeah, and here was a mistake in the equity financing part. So if he would do it in other way, maybe borrow money from somewhere, use the debt financing, then he would avoid losing the control over the firm. But debt financing has another problem. So nothing is perfect here. The debt financing, the problem of it is that we had to pay interest on the debt. If we borrow money, there are fixed amounts of interest that we have to pay, and according to the predefined schedule. And as we know, that doing business is a risky thing, and the chances are that things go worse than we expected, than we borrowed our money. For example, some of our partners, our customers might fail to pay us, then we do not have enough money ourselves to pay money back to the bank. Yeah, and in this case, it means that we have a default. The bank has an opportunity to go to the court and claim that you guys do not service the debt, it's called, so you do not pay money on your debt, and in that case it means a default. When you use the equity financing, it will not happen to you, because you do not have to pay dividends. You do not have to pay money to your stockholders. If you do not have them, you cannot pay. But to the debt holders, you must pay in any case. In that case, it is, from this perspective, it is more risky. And how to balance between those two problems, those two types of financing. This part of doing business is called the financing decisions. Please make note that it is not financial, because it's all is about the finance, but financing. So this is one of the instances where we see why it's better to use English here. In Russian, it is we only can say финансово. Yeah, and here the more accurate translation would be решение о финансировании, not just financing. And here in English it is more concise. We just go with financing decisions. And the main part of doing business is, of course, not where we get the money from, but what we do with those money. And this part is called investment decisions. And again, there might be the questions that you come across. What is more important, financing decisions or investment decision? The correct answer is that investment decisions are more important, because it is where we generate our money from. But financing decisions, they are more important to be done. It's important to make sure that they are done right in order to avoid subsequent problems. So in order to avoid the default, technical default, because we are not able to service our debt, or that to avoid losing the control of the firm. It is what can happen when we work with a fund. But anyway, the main thing that business is doing is investment decisions. So this is the main practice of doing so. Selling something, build some factories, negotiation, spend the time on the spend money on the business trip, spend time and money on the salaries, spend money on purchasing equipment or land, any property. So everything about the business is called, we are talking about investment decisions. And putting our course in 2 sentences, we can say that investment is what we going to discuss during our course. We're going to discuss investment decision, which is a decision to purchase real assets, and financing decision, the sale of financial assets. So why purchase and why sales? Purchase means that we spend some money, so we invest money somewhere, and sale financial assets means that we attract money. When we sell something, we receive money giving away something, and we sell financial assets. So financing decisions, but financial assets. Investment decision has some synonyms that you might come across. For example, capital budgeting, capital expenditure, this CapEx is something you will see in the annual reports of the firm. Capital expenditure, there are separate sections on the annual report of the firm. They will cover the main investment projects which they allocate their money on, and this is called the CapEx, capital expenditure. And here also one distinction that we should make is a tangible and intangible assets. Investment decisions are decisions on where to invest money, and we can invest money in either tangible or intangible assets. Tangible assets is something that's, putting things very simple, it's something that we can touch, investing in some physical assets, and intangible assets are something that are more difficult to estimate, something like patents, research and development. But these days, the role of intangible assets is no, it is the most important. It's higher than tangible assets. If we look at the leading and fastest growing firm, we will see that they are mostly grow through intangible assets, through their knowledge, through their organizational structure, through their skills that they possess. And that is why, if you visit the page of mine on the website of the HEC, you see that I belong to the Laboratory of International Driven Economy, to ID Lab, where we study the effects of intangible assets on the firm, on the people. We have a broad section of the sports economy where intangible assets are also quite important. And this is one of the frontier in the current research in corporate finance and in management. There are, if we talk about financing decisions, there are several choices that we make during those decisions. We have a choice between debt and equity financing. The debt financing has two forms. It can be either securities, bonds, or it can be a loan from the bank. And this debt financing, the more debt we have, the stronger would be the leverage. Why we call this leverage? Leverage would be, as you know, this is the thing that we use in order to raise something. So from the idea here that small movements on the one side of the leverage result in a bigger changes on the other side of the leverage. This is why we use this term. And analogy here is that by borrowing some money, we use this money in our business, and with those money, we can accomplish more in the main part of our activities. Yeah, so with the smaller money that we borrow, we can do more in our investment part and make more money. And that is why it is called leverage. Equity financing decision. Here also, we can boil it down to the two issues that we cover. What we do in our ownership. We can, when we need money, we can do debt financing and equity financing. Equity financing, something that is more evident is to issue new stocks to sell some ownership in our firm. And another thing which is also equity financing, because it belongs to our firm and we decide what to do to it, it is reinvest the profit. Every cycle and every period, firm generates some profit, firm has money that it earned, and it decides what to do with it. It can either pay them out as a dividend or it can reinvest them. The decision what to do with those money depends on the growth perspective of the firm. If the firm can grow, if the firm knows where to invest money to make those money bigger, to increase the amount of money, then it makes sense for the firm to reinvest those money. If the firm is quite stable, like utilities firm, so Vodokanal, RAO ES, they have a lot of fixed cost, a lot of assets, and they do not have much growth potential. But their customer base is very stable, and this is, we can call them cash generating, cash cow. So it generates money, but it has not many ways where to spend it. And in that case, for investors, it is better than such firms pays money out as a dividend, and then investors themselves can use those money somewhere else. For example, invest in other firms that has higher growth potential. Here we collected some, there is a mistake here, it is in 2021, this is first year, so my teaching assistant helped me and gathered some information on the recent investment and financing decisions that our firm makes. So the point here is to illustrate to you that this is something that firm daily works with. Here we have illustrated some major investment decisions, but strictly speaking, the decision to raise or reduce the salary to any of the employees, it is also an investment decision of the firm. And from the other side, decision of borrowing money, if we talk about huge firms, it cooperates with multiple banks, it has multiple borrowing schemes and so on, and each of those parts of the activities are related to financing decisions. And here are some of the major ones. For example, acquisition or decisions of the board of directors regarding the distribution of the earnings of the firm, and so on. Maybe let's try to have some interactive part here. Could you please write in the chat which decisions would be financing and which decisions would be investment or capital budgeting decisions? So just write, for example, A, F, B, F, C, I, and so on. So in a very short form, first letter that represent the number of bullet, and first letter I or F, meaning that you either think that it's investment or financing decision. Could you please do that? Ivan, thank you. Good. Good. And by the way, talking about interaction, it is very much encouraged if you occasionally turn the video camera on, so it's much more fun for the lecturer to see you. We do not insist on that, but would be cool if you do it sometimes. Let's take a look. At least we can have interaction in the chat. Because with this online education, like, I even do not know how you look. This year we have, now I see my former students of the previous year in the school, but I even cannot recognize them because I cannot see how they look like. Okay, but still I see that you provide some answers. Good, thank you for that. Let's discuss. Intel decides to spend $1 billion to develop a new microprocessors. Let's look what you've written here. I think all of you agree with each other here. So this is investment decision, because this is decision how to spend the money, where to invest, in other words. Volkswagen borrows 330 million euros from the Deutsche Bank. This is financing decision. Yeah, so this is decision on the source of financing that we will work with. Good. Royal Dutch Shell constructs a pipeline to bring natural gas onshore from the production platform in Australia. This is investment decision. Yes, I see that again. You are correct here. Yeah, because this is again investment regarding the this is decision regarding the investment decision, how to use the money that firm has in order to make more money. Avon spends 200 million to launch a new range of cosmetics in European market. Again, investment decision, the reason is very similar, and Pfizer issues new shares to buy a small biotech firm. This is financing decision. So, and here in the final one, we have a link between financing decision and investment decision. And this is mostly so. Particularly then firm has some major investment projects. Firm usually has to do something regarding the financing. I saw there is a hand raise. Please,
Yes.
please go ahead.
About the last one, about Pfizer, so they are not actually like intending to keep the money. They are spending it to buy a small biotech company. So isn't it investing when they are spending money?
No, this is no, those things are very much connected with each other. Firm attracts money not just to have more money. It attracts money to invest them. There is always no. It can be here in this example. There is a direct link between where firm gets money from and where it allocates them. It might be that just firm attracts money and then it is used for the current operation just to expand the current scale of the business. But still, no, it should be like that. The firm, if firm has no ideas what to do with this money, firm shouldn't attract more. So ideas comes first, and that is why investment decisions are more important than financing decisions, because before attracting money, you need to know where you will use them. Does it make sense?
Yes, so it is still financing.
Yeah, financing. Here you see, it's put, sentence is put like that. So Pfizer issues new shares to buy small biotech firm. If we would put it oppositely, Pfizer acquires small biotech firms, and for that, in order to finance it, it issues new shares. Then we would say that it is investment decision. Like here we have both, but the accent in this sentence is put on the first part. Therefore, we say that it is a financing decision. Here some more entertaining part. The decisions where to get money from and how to allocate them are not just math, not just some accounting. There is a huge drama. The huge drama can stand behind it. Yes, so there are examples of movies which are about some financial things, about some financing or investment decisions. So if you talk about the founder, this is the story of guys, brothers who found the McDonald's restaurant, then some active entrepreneurial guy found them, and what happens next you discuss. And also there is a Big Short firm regarding the recent financial crisis and a misbehavior of major investment banks also regarding the financing. So how they attracted the money and attracted the money in irresponsible ways, and about the people who determined that there is a huge problem and betted that the things will fall and made money on this bet. And so on. The Wolf of Wall Street is also quite famous. So behind each of the things that we discussed during the course, there are a lot of examples, and it's all quite dramatic, because what also is good about our discipline, because it is about the people, and people, the cases when we work with the money, who gets money, how we get money, those are the conditions, the instances where people can demonstrate either the best part of their nature or the worst part of their nature. And there are a lot of things that can be presented in cinema, in a kinematographic way. Another important thing that we should understand at this point is what would be the organization, what would be the thing that we work, what we talk about. When we talk about the firm, it might be different in terms of the way it's organized. And here we present the main types of the firm. There are the simplest one is called sole proprietorship. It means that it's just private individual who went to the tax authorities and issued the right to do business. The problem with that would be that it has the same lifetime as this person, because it is undistinguishable from the person. And another problem would be that if you do business as a sole proprietorship, you are responsible with everything you have on the operation you do. So if things go badly and you owe a lot of money to someone, then you might be responsible with your flat, your private car, and wherever, with everything. The same applies for the partnership. In partnership, you have a ways to protect your personal belongings, but in this basic form, it is the same in sense of responsibilities as sole proprietorship, but it's just we talk about the multiple people, so who organize together in a partnership. If you want to make some bigger operations, do some bigger business, then you must launch corporation. The corporation can be either closely held or public. It means if it is public, it means that you can buy the stocks of this corporation on the stock market, so they are available publicly. If it is closely held, it means that stocks are not available there, but still you can make operations with those stocks, but you directly make those transactions with the current owners of these securities. It means that the firm is closely held. The advantage here would be, so if you, let's say, you purchase the stocks of wherever, Gazprom or Sibur or Mail.ru Group or wherever on the stock market, you are not getting responsible for the results that they have. Even if this firm fails, and even if these firms will have to pay a lot to its lenders, still you are fine. You do not responsible with that. And also it is applicable for the smaller firms. So if you open limited liability firm, in Russia it's called Общество с ограниченной ответственностью. This is the simplest form of the corporation. You are still not responsible with your personal belongings. And this feature is so important that it determines the name of such type of organization. So Общество с ограниченной ответственностью, this limited responsibility means exactly that you do not risk your personal belongings on the activities of the firm. And also the advantage here that the firm lives separately from its owners, and that is why it is in theory has perpetual life. There are some firms out there who works for the multiple generations for more than 100 years, and they still successful. There are some banks in Venice that are there for multiple centuries. There are some firms almost everywhere who continue their operation for the long time. And here we also some important conclusion out of this perpetual life of the firm. It means that, for example, next time when we talk about the cash flows, we will see that when we analyze the firm, we use an assumption that it lives infinitely. So we will use particular types of cash flows which are infinite. So they are eternal, forever. So let's say 100 euros every year forever. And there are special types of, there are special mathematical tools that we will use here in order to work there. And there is a, this is something that we'll cover on. But again, the disadvantage, everything has advantages and disadvantages. And disadvantage of the corporations that they are taxed more heavily. There are more taxes that you have to pay as a owner of the corporation than as a private entrepreneur. And the difference would be that the tax corporations in most countries, including Russia, they are taxed twice or even more times, depending on the taxation procedure that firm works with. But at least firm would pay itself the profit tax, then out of the money that remains, it can pay dividends to the shareholders, and then those shareholders themselves will pay tax on dividends. Yeah? If we talk about sole proprietorship, as everything is together, the activities of the firm and the private activities of the entrepreneur. That is why it is taxed only once. Yeah, so, and in that case, there is advantage. But the more sophisticated taxation schemes, the more things can be done in order to minimize the amount of taxes that firm pays. And there are big firms that doing tax consulting, and still this is big part of the doing finance is taxation optimization. And this is something that we also touch a little bit, but I think in your curriculum you have a separate course on taxation. There you discuss it more in detail. The role of financial manager in the firm. And here the basic scheme of what firm is doing, and with a financial manager in the center, and how it all works again. So this is the same thing about investment and financing decisions, but here we emphasize the financial manager. First, firm attracts money from financial markets, either as a debt or equity financing. Then firms uses those money in operations. If things go fine, firm has some profit, and financial manager decides whether to. No, he's one of the people who decide, and he has a strong word there. Also, the CEO would be the person who makes the decision here, and they decide whether to reinvest money back, so to use them again, or to pay money out to the financial market to pay them as dividends. And decision mostly depends on the growth perspective of the firm. If firm knows where to use money and if firm has a lot of growth potential, it's better to reinvest them so investors will earn more. If firm has not many ideas what to do, then money should be returned to the investor. And again, trying to make things concise, trying to boil down the things, let's talk about the financial goal of the firm. The firm belongs to the stockholders and they have some preferences. So what they want? They want to maximize their wealth. They want to have their wealth when they need. So when we are young, we usually have more needs but less money, and then we are getting older, we tend to have more money but less needs, and that is why usually people during the first half of the year they borrow money to finance, for example, to finance the flat, and then as they are getting older they pay those money back and also save money for the retirement and manage the risks associated with this consumption plan. As we know, sometimes risks occur, and we want to make sure that we will have enough money that we plan to the particular period. And this is things that concern investors. There are, and regarding that thing, we can ask firm to follow, to chase different objectives. The one that we will work with would be the maximize the value of the firm. But there are some other alternatives that can be offered, for example, profit maximization. Even though the firm should maximize the profit, but as a final ultimate objective of the firm, it is not the perfect one. It is even not the perfect one, it is even not the best one. And because it has multiple limitations. It is not well defined, because if we tell the firm as a shareholder, please do your best that you make money as much as possible to have highest profit, then the question would be, should we maximize the profit in this period, or make sure that the profit is high enough and stable? Because there are some short-term actions that we can do in order to make a lot of money now, but it might harm our subsequent activity. For example, if we ignore the investment part, so if we do not invest in the machinery, we can make more money today, but in long run we will become not competitive. And in that case, just maximizing the profit might be not the best objective if we want to use the single one. That is why we work with the objective of maximizing the value of the firm, the stock price of the firm, even though this objective itself also has some drawback, because talking, for example, about the public firm, we see that there are some fluctuations which are not due to the activities of the firm, but it is due to the changes in the market trend. But still, this goal is more fundamental, and in the middle run and long run, the market price reflects how firm performs quite well. So it is quite if firm is doing fine, the market price will eventually be high as well, and vice versa. Hurdle rates, cost of capital, and when firm makes the decision about where to invest, it always must consider the hurdle rate. And hurdle rate represents the opportunity cost of capital. What we can do instead and how to compare it with what we did. So if we, let's say, have very risky startup projects, which is only gives us 5% a year, it doesn't make sense, because 5% a year we can make just in the deposit in the bank. Yeah, and in that case, if we talk about very risky projects, we should aspire for the higher returns. And there is a general concept in the finance of risk-return frontier. The higher the risk of the enterprise, the higher return should be. And here, this scheme again of financial manager operation in slightly different way. So financial managers decide whether to give money to the shareholders or reinvest in the projects. If firm doesn't have much growth perspective, then it's better to give to the shareholders, and then shareholders themselves will reinvest money to the economy, to other firms that grow faster. And there is a goal, so there is a thing that shareholders want firm to do, but there are some issues arise. For example, the firm lives not in isolation. The things firm does can affect the society, environment, and so on. And that is why there is a broader range of people and of some institutions that can be affected. And this broader range of everybody and everything that is affected by the firm activities is called the stakeholders. And in current paradigm, the firm must make sure that all stakeholders benefit from it, not just the shareholders themselves. And another issue that arises here is agency problem. Agency problem is the problem that there are some managers that has to protect the interest of the stakeholders and shareholders in particular. And but they have their own interest, and the conflict of interests might result in a misbehavior of management. And these things are covered with corporate governance. Here you see the list of the stakeholders of the firm. And by the way, please do not confuse the stakeholders. Stakeholders are all of institutions and persons presented here. And also we have here on the top, we have shareholders. And shareholders we call either share or stock. They mean the same. Those are synonyms. Those are securities that represent the ownership of the firm. And stakeholders, please do not confuse stakeholders and stockholders. Stockholders are the same as the shareholders, and stakeholders are everyone that can be affected by the firm's activities. And the broader concept here would be the efficacy. So what firm does and how it affects the stakeholders of it. And this is also important frontier of the regulation and on the research, how to estimate the efficacy of firm behavior, how to estimate the effect of their activities on the stakeholders. There are no final answer here, and this is also the area where you can apply your research interest, where you can try to do something. Yeah, agency cost. No, we discussed with them briefly to you. There is, we also plan to discuss them more in detail during the seminars with Vladislav. But in general, the agency problem is a problem that we have owners of the firm, we have stakeholders of the firm, and we have managers who should do the best to protect their interest. But they can, sometimes they do not do it right, and everything related to it is talk about agency problem. And monetary estimation of this problem is called agency cost. And there, I think you also should have it in the curriculum, or maybe at this stage or in master program, you would have a corporate governance. And corporate governance is the whole discipline which is there to study the ways how to mitigate the agency problem and make sure that that the management acts in the best interest of the shareholders and stakeholders, talking more broadly. And yeah, this is, I think, is the final slide today. This is the examples of the misbehavior of the firm. So if managers can do something in order to maximize their wealth or retain their position, even if it is not the best option for the firm itself, so it is not the best option for the shareholders. And in that case, some of those practices might occur. At home, please look at them, maybe try to Google them, look for examples. There are many. For example, poison pills. Last year, Yandex issued kind of it in order to keep the interest of the current manager and the owner to provide. This is not always bad things, but those are particular things that are there in order to mitigate the conflict of interest between different groups, in order to mitigate the agency problem. Yes, this is the end. This is the reference of the book, and things we discussed today refer to the first chapter of the book. I think I will upload 11th edition on this, and this is it, on the smart LMS. And yeah, do you have any questions?
No.
No, everything's good. So, no, I will share the materials. You can look them, and you will also have an access to the lecture. Thank you for being here today.
Bye.
Yeah. Oh,
Thank you, bye.
bye.
Thank you, goodbye.
Bye.
Thank you, bye.
Goodbye.
Thank you. Thank you.